More now on the other big concern for the markets this week. That would be the Fed's meeting kicking off tomorrow. Steve Leisman has more on how the central bank's decisions on its asset-buying stimulus plans and interest rates could further roil world markets.
Broad expectations on Wall Street that neither emerging market problems nor currency volatility nor a weak December employment report will stay the Federal Reserve from its appointed rounds of completing QE3 this year. It's expected to continue the process that it began in December with another cut to bond purchases at its January meeting, which ends on Wednesday. This is, of course, Fed Chairman Ben Bernanke's last meeting after 8 years in the leadership seat. Janet Yellen takes over as chair on February 1st, and her first meeting will be in March when there will be a press conference. But for now, here's how market observers think the Fed is likely considering recent market volatility. Does it change the forecast? Answer, probably not. Does it represent systemic risk to the U.S. and global systems? Again, the answer is probably not. And are there underlying macroeconomic troubles that link all of the countries? Again, the answer appears to be no. Officials who I spoke with see the events of the past several days as more linked to specific events in specific countries, more political than economic.
Several of them have very key elections, and most of these elections have a high level of uncertainty attached to them. India's having elections, Turkey's having elections, Brazil's having elections, for just to name a few, and these are all very complicated.
But there's also a link to Fed policy. A lot of money has flooded into emerging markets seeking higher rates of return on those countries' bonds. Now that the Fed is reducing its efforts to keep rates low here in the U.S. and interest rates have risen a bit, some of that money is fleeing emerging markets and coming back home. But there's another reason. The outlook for growth has also changed, with less growth expected in the emerging countries and more in developed countries like the U.S. and Europe. So money is following the growth. For Nightly Business Report, I'm Steve Leisman.